Our second panel discussion is on the topic Mutual Funds and IPOs Growth Drivers for a Viksit Bharat. For that, I would like to invite our moderator, Niraj Shah, Executive Editor, NDTV Profit, and with him, our panelists, Dhiraj Relli, MD and CEO, HDFC Securities Limited, B. Gopkumar, MD and CEO, Axis Mutual Fund, and DP Singh, DMD and Joint CEO, SBI Mutual Fund, to please join us on the dais. A round of applause for the panelists and our moderator.
Perfect. We won't go this much. No problem. I'm sure we are audible behind, and in some sense, Lata and Sandeep set the stage for this conversation, because while we were talking about Viksit Bharat, when we talk about mutual funds and IPOs, or IPOs these days, पहला क्वेश्चन ये आता है कि यार इतने महंगे IPOs पे लोग इन्वेस्ट कैसे करते हैं, and it is ubiquitous. The question is for retail, the question is for institutional investors, the question is for the HNI category and everybody, right? So I'll take a brief moment of 5 minutes to talk about that before we talk about the Viksit Bharat and the mutual fund and the IPOs combination out there. But either of or any of you can start. How do you respond when, I'm sure in the last 2 months, all of you have been asked this question, कि अगर इतना महंगा IPO है, तो म्यूचुअल फंड इसमें पैसा क्यों डाल रहे हैं? Yeah, any of you can start.
You asked a broker became asset manager. You got a broker, you got a long-standing asset manager. So you got a good combination.
Agree completely.
I think what Sandeep said is very right, in the sense that there is a pressure, because today social media has their own way, the way you evaluate. It may be true or may not be true. From a funder's perspective, yes, we look at the merit. We are not looking from the stock from today, what is going to happen post-listing. I think it is looking from a pretty long period of time in terms of, and we are only long on funds. We are not a churning funds in that sense. So we do see some merits, we do put money. And there is a justification internally before we take a call. It's just not that one fund manager just wakes up in the morning, decides to put in. I think there is also a tremendous pressure for a fund manager to justify the valuation. And obviously it goes through 1 or 2 levels of committees to approve it. So I think there is a level of freedom we give to the fund manager, but ultimately these are documented in terms of what the merits of the product are all about, the merit of the IPO is all about. So my view is that not all IPOs we participate based on merits, based on the mandate what we have in the fund. Very important to think about it. There are mandates may not be there. For example, we don't have money in our mid and small cap, we don't subscribe for it, even though we look good, we say sorry, we don't have money. Because just imagine, every day we have at least 10 people coming to the office. And if you come after 3:30, you can see barging of, we have a large reception now, so you see a lot of the promoters there. So it is a tough job, and we all get calls. Innocent bankers are pretty active there. So my view is that there is a merit behind what we put behind. And after all, it's markets then.
I have a cheat code because I spoke to Dhiraj outside. But yeah, sure, Dhiraj, you want to take a go at it?
So I'll give you a slightly different perspective.
No. Here, try this.
Yeah. Yeah, no worries, I think. Hi, everyone. Good evening. So I'll give you a slightly different perspective backed by the data only. We have got 35 lakh crore kind of AUM for equity mutual funds. And this year, investment in IPOs is just about 22,000 crore, 22,700 crores. Out of that, Anchor was about 15,000 crore, rest was QIB. So it's not a large number. And also, as far as pricing of the IPOs are concerned, I think we got 9% kind of listing gains in the IPOs, despite all possible hype about the higher valuation, pricing, and so on. Of course, few IPOs have given upwards of 100 to 200% kind of listing gains also, and few have not given. 40 out of 65 IPOs were still open positive. So that way, I think I don't see a significant challenge here. As far as selection of IPOs for mutual funds is concerned, I think they all have very robust internal assessment process in place. They go through the internal guidelines and they evaluate each of these IPOs and the merits, and according to their appetite and their requirements, they put in this side. Also, you must see that this year and last 2-3 years in particularly, we've got the IPOs in the new age businesses also. They are very different businesses, new businesses, uncharted territory to large extent also. So to that extent, I think it's difficult to value them also. And also now, merchant bankers are supposed to disclose in every IPO that how many of their IPOs have opened positive, how many have opened negative. So some checks and balances regulators have also brought in. Also, earlier, mutual funds were not supposed to disclose which scheme they will be putting in the IPO. They were generally looking at the larger amount and then allocating it to the scheme level. Now they have to even disclose at the scheme level. Last point, I think mutual funds have been receiving more money in the mid caps and small caps, and most of these new IPOs are in that category. So obviously they become an attractive option for them for allocations.
Okay. Mr. Singh, and just before you answer, I must say that I am a minority maybe I'm a minority on the journalistic side, in that my opinion, every morning when I air my opinion on my channel, मेरा व्यू यही रहा है कि, और my comment has been कि a company is pricing an IPO as per what they deem fit. It is to an individual's choice whether they want to subscribe or not subscribe. So why is there so much of hullabulla around the valuation of a particular company? But I think the landscape just changes a little bit when it comes to mutual fund. It is not about where I just maybe slightly disagree. It's not about the percentage of capital out of the total AUM going behind IPOs. Even if it is just 0.5% of the money coming in, because mutual funds are custodians of public wealth, why is it that some of those subscriptions happen at the mutual fund side? That is my question. That's the only small point where I kind of maybe stand not in agreement with Dhiraj, but otherwise, what's your view there?
No, Niraj, I absolutely agree with you that we are custodians of the public money, but we are not custodians of the people's money at our own whims and fancy. The public is giving us mandate to invest in a particular category or a particular theme, whether it is in equity or this thing, so we have to do that. Second, I think we are in the sweeter spot where earlier we were always talking that there is a demand-supply mismatch, huge demand-supply mismatch. A lot of money was coming into equities, but there were no companies where they can put money. Every paisa was going into the same companies, making them more costly. You tell me one thing, a company which is likely to give a CAGR growth of 15% year on year for the next 5 years, at a PE of 50 is better, or a company which is likely to do 5x growth in next 5 years at a PE of 70 is better. So mathematically, it's a simple thing, the other company is better. As far as, valuations are concerned, as it has been, Dhiraj has rightly said, it's in the market, right? We have money. Even today, when we said 37 lakh crore of the company, and money is the equity mutual funds.
Yeah.
And generally 5 to 7% is the cash component. So meaning thereby 2 lakh crore is the money which is lying with the mutual funds to invest, where the mandate is to invest in equities. And when new businesses, good companies are coming, even on a little valuation, which again is a perceived valuation that is higher or lower. But if people are ready to give that valuation, then I think our people are doing a great job. And in the IPOs also, a lot of hard work goes behind this. First thing first, any mutual fund, I don't think any mutual fund is just going because there's an opinion in the market and they do it.
Of course.
It doesn't happen. There's a lot of hard work which goes about it, and it's ultimately, we will be judged, any mutual fund will be judged what value they create for the investor. It's a hugely, I respect the fund management fraternity a lot, the kind of hard work they are doing in finding out the companies. Even today, mutual fund industry per se put together, they are not putting money in every IPO which comes. Hardly, a very small percentage of the money where mutual fund money is going. I think we are in a very, very good stage where a lot of IPOs are coming, new businesses are coming into the market, and we are able to find value for the investors.
In some sense, yeah.
Just
yeah,
add
please,
to
please.
the DP Singh's point, I think in 2021, mutual funds participated in 96% of the IPOs. This year to date, this number is 65, 66%. So it's not that mutual funds are participating in every IPO. They've been selective. They have their internal robust assessment process in place.
I think, Dhiraj, maybe what happens is that in one or two much spoken about IPOs, if there are investments done wherein the perceived valuation is high, I think that becomes a big talking point as to why is it that this has happened. And coincidentally, because the names are being released now of the mutual funds investing, if there are names released of, I mean, it's not too often that we see कि ये भी नाम रिलीज हुए कि ये 6 AMCs हैं जिन्होंने ये IPO में पैसा नहीं डाला. I mean, that also became a talking point. It usually doesn't happen, but it became this time around in one of the IPOs. But okay, so the answers to some of these things become boring, but this is actually the meat of the problem. So I'm glad that we spoke about this. Now, shifting focus to the topic which was mutual funds and IPOs and, the road, in some sense, Viksit Bharat, if you will. It's fascinating that so much of retail money is available, quote unquote, on tap for private markets, for companies which are moving from the private markets to the public market. And it's almost unprecedented because, you guys have been here for longer, but 22 years that I've been doing business journalism, I haven't seen such a development in the Indian market. It's very similar to what maybe happened globally. How do you guys feel about this? And how do you guys feel about what will happen to the primary markets and the subsequent listings over the course of the next 5 years if this is the flow of money that keeps on coming to mutual funds?
So let me start.
Sure.
I know. I have seen the times when to fill up a form, you pay for the form also, or you get money for the form also, depositing the form also. That was a time in 90s for IPOs also. But later on, I think equity penetration was absolutely abysmally low. Very difficult job to talk about equity and mutual funds. I was product manager for mutual fund in 99 with ICICI Capital. Sandeep Sikka was also with ICICI Capital. And we were selling ICICI safety bonds also, where we were paying interest of 14-15%. So my colleague Sandeep will go and make a presentation on safety bond. I will go and make a presentation and convince people on mutual funds. Mutual funds, sahi hai, was not that time slogan, but I used to make presentation in my own way. But he'll come, forget everything. You get 15% interest. That's the best product you can invest in. And you get also tax benefits and so on. So it's a really hard work and really a long journey for all of us to convince investors to navigate the volatility associated with the equities. It's still, I think it's just tip of the iceberg only, and long way to go for us to convince the larger investing community on how to navigate the volatility. Of course, SIP as an instrument has helped us to convince people, okay, you can invest in a staggered fashion, and over the years you will get average, get multiple entry points, and you will probably in long term make more wealth. And the data suggests also there's enough and more data available. If you look at 3-year, 5-year horizon for any SIPs, I think there has been a reasonable return, at least in low teens, if not in high teens, for the investors. So to that extent, I think it's a culmination of loads of hard work done by entire mutual fund industry, distribution industry, and it's just getting started. Trust me, Lata was mentioning about 13 crore investors. There are only unique 5.3 crore investors in the mutual fund industry as of now, not 13 crore investors. Yeah. Okay.
Dhiraj, sorry, but
folios are 26 crores.
No, but the question largely is around IPOs in mutual funds and not necessarily the entire gamut, right? So can I ask you to speak about that, and then Mr. Gopkumar, Mr. Singh, you can come in on that as well.
See, IPOs are like any other investments option available for them. You are judging them for a 1 or 2 IPO where they can go right, they can go wrong. I am not representing or defending mutual fund industry for that. The same is true for even for the equity decision or even for a debt decision also. They are making in their true letter and spirit, trying to make right decisions for as per the mandate. They can be right, they can go wrong also. So that's part and parcel of the thing. And now because they have the funds available with them, obviously they will look forward for a liquidity and opportunity available in that. If they get with lower impact costs, they can invest into the IPOs and participate in the long term in certain companies. I don't see there as a big challenge. In fact, people have been talking about we are giving exit to MNCs, we are giving exit to the promoters. So be it. They have taken the risk. They have put in the risk capital at the early stage, and now if they're looking forward to exit, what's wrong in that? There are investors who are redeeming from the mutual funds also. There are investors who have invested into direct equity and also in cashing or monetizing it as and when their targets have been reached. So it is a normal business as usual, and I don't see anything malified here at all.
Okay. Mr. Gopkumar, I'm going to rephrase my question and come to that topic therefore, right? Now I'm shifting, in case it was sounding that I'm being negative about this, I'm now bringing the focus to the positive side of it. That because AMCs in general, private markets in general as well, have capital to deploy, and because there are so many companies going public, is the mutual fund money and the private markets money for IPOs, for companies or promoters who want to go public, being available on tap, a really big positive? Because never before did Indian private markets have such capital on tap.
So I don't know how many people know the background. Early days when I used to be in so-called investment bank, we used to sell IPOs. We used to, half the time we used to be in Singapore and Hong Kong and trying to convince people to put money. And in fact, we are called as red-eyed investment managers because investment bankers generally doesn't sleep during this period of time because we fly across the country. It was like one IPO is over, we celebrate the IPOs got over. From there to here today, I think the most of the promoters today would like to be a part of the, they raise money only in Indian capital markets. In that sense, it gives a large opportunity because in anchor book, we used to find difficult to even get allocations today. Today, we are much more allocations we get. Another point very important to think about is that we also push for the better valuations.
I'm sure.
I think that is very important to think about it. Today, earlier the price and the valuations are decided by a guy sitting in Singapore, Hong Kong or New York market and commanding the valuation. Today, we decide the valuation. We push. I can't tell the instances where promoter has to come down by 10-15% of its aspiration, below the number what investment bankers have proposed. Because ultimately there is a sense of teamwork in the fund management team. It is just not with our own AMC, for example, they're quietly connected with most of the AMCs. They all sit together and they also sometimes push the promoters to bring down. Our objective is not that we want our investors to make money ultimately. It's not that what we make money. I think that's very important. If you are buying cheaper, it's beneficial for our unit holders. I think that's the mindset, Niraj.
Yeah.
And if you talk to any fund managers, they say that, look here, I am not going to buy this because of this valuation. Third point which I want to make very clear is that when you buy a stock, I think this is the much more secret what happens in the industry is that we are buying based on FY27 numbers even today. We are not buying even FY26 numbers. Because if you look at FY26 numbers, things are much more expensive. So you are validating your business model and your own analytical model based on 27 numbers. You are doing channel checks based on 27 numbers. Niraj, I can give you off record what examples we build on. It's just not on the FY25 numbers and say, ye bahut acha dikh raha hai.
Yeah.
And the fourth argument is also that India has been a very expensive market. Okay.
Always been, yes.
Yeah,
Right.
very, very expensive market. And there are styles of fund managers, right? For example, we are a growth style guys. In that sense, we follow growth and quality. We look at high cash flow companies. So generally, we have a tendency to buy based on the cash flows and the growth, what we're looking at. So I think models are a bit different from one fund to another fund house to another fund house. So sometimes you think that why did DP didn't buy, why did Axis bought? Because there is a style difference, right? There are fund houses which are clearly focused on value. They may not touch me, touch the new IPOs.
Sure.
That's a style, because that's a style which my distributor has gone ahead and sold to the investor, because he believes in particular style.
I hear you. Okay.
So these are multiple factors.
Sure.
The last thing which I want to make a point, because from the distribution perspective, is that yes, we have only 5.7 crore customers, unique PANs. What is important to look at that in India, fixed income has not grown up as much as possible. If you look at clearly SMEs and MSMEs, the current account balance is 21 lakh crores. They do get a zero interest on that. And somewhere we have to do much more work on the institutional side in terms of your mid-market, which we as asset management company has not done much work on that. I think DP will agree, it's huge amount of money. We both come from a large bank subsidiary. Okay, large bank subsidiaries. When I go to their conferences, I see this number. I just was 3 days back before I was looking at this number. I said, this is our opportunity because this is the idle money what bankers make. And even their institutional investors, which are SMEs and MSMEs, they are not making money on current account. And banks generally make money out of the idle money, right? They don't like to pay interest on deposits.
Sure.
I think long way to go in terms of asset management as an industry, so we should not look at purely equity. Whenever I meet our distributors, the first thing I say is that if you are doing an asset allocation, why are you putting the money on FD? Check your investors' account balances. At least 3-4 lakhs lying there. Why can't you put money in arbitrage fund or liquid fund? Because it gives you better return.
Yeah, most certainly. And
I think that's one of the areas we need to think about as an industry.
Okay. And no, actually, it's an important point that you wrote as well, because I was speaking to a banker who was telling me, मतलब वो blocks करते हैं. तो उन्होंने बोला कि पहले blocks के now FIs tell them कि यार ये block हो गया, इतना बड़ा block था, पहले तो हमें फट से पता चल जाता था, अभी पता ही नहीं चलता है because the mutual fund industry kind of is out there. The Indian domestic mutual fund industry is out there to take care of the largest of blocks. So there's a sea change, right? And I remember in 2017-18 जब ये बात निकलती थी that Indian retail investor will bring about a big change in the Indian capital markets. पता नहीं था कि इतनी जल्दी हो जाएगा. That FIs, while very relevant, are now maybe second fiddle, if you will. But Mr. Singh, on that IPO thing, before we move to just pure play mutual fund conversations as well, just this question about how Indian domestic money becomes available on tap is such a big boon for entrepreneurs who want to take risk. Because in India, that was sorely missing, right? We still don't have the institutional capital to back a semiconductor factory, which is very large capital. But there is money available from domestic institution investors for entrepreneurs who want to take a risk and eventually go public. It's a big deal.
Yeah, absolutely. It's a very, very big deal. And see, honestly speaking, it's an issuer's market today. When any business is a demand supply. Demand is much more of a good quality paper, supply is much lesser. And one more thing, let me tell you, thanks to the regulator, thanks to the overall ecosystem, you will not see the kind of fly-by-night companies which used to be the case in 90s and 80s, that company आई पैसा लेके चली गई पता ही नहीं promoter कहाँ है. It's not possible today. Second, lot of hard work goes into it, and see, as I said earlier, and issuer's market, why I am saying so, when issuer is there, he wants to sell at a particular price. There are people in the queue who want to get it. Because the money is so much, and that's very good for entrepreneurs, as you rightly said. And today it could be debt, it could be equity, it's a issuer market. Because, but at the same time, it has to be a good quality. The quality product, on equity side and debt side, there's no dearth of money. And any good entrepreneur can get money on tap. And that's absolutely clear. And today, FIIs are finding it difficult to make money in India, but Indians are making money in a big way. So that's a big change. Earlier, they were making money, they were going away. Today, they repent, why did we come out of India? And now, again, the next price, they have to fix at what point they will go back. As earlier Sandeep was saying, so many global fund houses, they left India. Today they are again finding ways and means how to come back to India. So that's the way it is. And see, I think more and more money will keep on coming. But let me tell you, as we talk about taking the money out from India by FIIs and the domestic investors, there's a big trend which we have to see within India also. People who have made money, they are going out, and the people who are the new investors, they are coming in. Just before coming for this panel discussion, I was just reviewing the numbers. one particular channel's SIP book, right? So I looked at it, they did a SIP registration of almost 300 crores, but the net SIP book which came in was just 50 crores. So what it means that 250 crore people, they have booked profit, they have gone out, they have cancelled it, they have gone into some other areas, but net is only 50 crores. So that's when it's not only FIIs, we don't look at the deep into the numbers. Indians are making money, they are booking profits, other people are coming in, but the people who are coming in are more than people who are going out. And people are getting into private equities, people are getting into, and now we look at the SIFs. SIFs are going to be a big game changer. Because we are not getting, when Indians will not make money only in public market, but they will have some money making out of the very fancy tools, derivatives, as well as there are some cases where they are getting money from the private markets also. Today, private market is one place where again, foreign venture capitalists making more money than Indian. I think this trend is going on. 10 years down the line, we will see that in the private market also, Indians are making more money than the foreigners.
What role will mutual funds play there? It's an important point. I would want all three of you to kind of comment on it. And me and Dhiraj actually spoke about it a bit outside. But Mr. Singh, can I start with you? What role will mutual funds play in the private markets, you think?
No, we have IAFs, we have PMS, we can come out with the IAFs where we will invest money in the private markets.
Yeah, but that is, in some sense, not the the SIPs have democratized it so much that मेरे पास 250 रुपए मैं डाल सकता हूँ and I can buy into the public markets. Do you reckon something like that can happen in the private markets over a period of the next 10 years?
It will definitely evolve. May not be 250 rupees, but
of course, won't be 250, yeah.
But 2 lakh rupees, 3 lakh rupees, it will come.
You reckon it will come?
Definitely it will come. It has happened in SIF also. The entry point is 10 lakh rupees.
Right.
Thereafter you can do SIP of 10,000 rupees also, 5,000 rupees also. So it's just the entry, so that you are an involved investor, you must know what you are doing. You are expected to do, you must get yourself educated. But thereafter you can put small monies also. If there is a fund which is putting in a private market, why can't? The people will do that. Today they are doing it in an unregulated market. The regulated place is something which is going to be there, and I am sure that Indians will make money in the private markets also en masse 5 years down the line.
Yeah, I believe SEBI's done something to an announcement to that effect as well, right? A private exchange, if you will. But Mr. Gopkumar, your
I think 2 ways to think about it. Okay? If you look at for the last 10 years, the people who made money, the UHNIs, what are they doing? Very important to think about it. The UHNIs today is not buying up plain mutual fund schemes. If you look at amount of private holdings they have, typical case is NSE when we started off. Look at number of investors NSE had some point. Today, I don't think NSE has to list because there are huge number of retail investors.
Yeah. They're practically a retail stock. Yeah.
So if you look at, so we also run a private equity fund, and we also have assured us as a global partner, so we understand the space pretty well. India, what is changing in India is family offices. Globally, family offices supports this private equity, and that's where your LPs come into play. In India, the way we run private equity, my comment is like a mutual fund. In the sense that 1 lakh into, for example, if I raise 1,000 crores, you typically find 600, 700 LPs. This is not the right structure, and that is getting evolved. So my view is I always make fun of my own managing partners. You run like a mutual fund because you can't have 600 contributors. They call us LPs, right? But now what is happening is that institutional participation has started off. Okay, whether it is private credit, specifically on a private credit has taken off pretty well now because you have now large insurance companies in India now are willing to put the money because there's a tax advantage and you are longer term there. I think private credit is okay, but private equity, my view is that now family offices have started contributing. So they would like to have become a co-investors. So you see that changing. But my view is that it will at least take 10 to 12 years to grow. Today in India, if you have to qualify and say that how many family offices are in the country today, about 1,000, our estimate is around 650 family offices. Because all these promoters who encashed, they have their own family offices. So that breed is growing. Yeah. It takes some time, but as DP said, today private transactions are dominated by your global guys, whether it is on the private placement equity side. The large amount of money in the country today, real estate comes from the largest fund. So there's a long way to go. I don't think the I call saturation in terms of private equity, I don't think it will happen. On a AIF structure, there is a problem there because the regulator says 1 crore is a minimum cap and the scalability is a problem. But if you look at some private wealth guys, they actually satirize. If you want a 30 lakh paper, they will give you a 30 lakh equity paper to you.
Sure.
They have done that. So it's a long way to go in the private markets. Private markets still has been controlled by LPs.
But it's coming up. Okay. Dhiraj, your views.
So my take on this subject is it boils down to the price discovery and complexity attached to it. In secondary market, the price discovery happens through the stock exchange. There are buyers, there are sellers, you get a price discovery, fair, unfair, that's the price. It's decided on the exchange. Similarly, on the IPO side, the price discovery is happening. Again, there are issuers who are trying to raise money, and at certain price, there are subscribers to it, whether institutional or retail, and that's how price discovery happens for the IPOs. Not all IPOs get subscribed also, though in the last few years we've not seen many defaults, but which clearly means that there are subscribers to these IPOs. That's why they are able to get that. The price discovery in the private space is very difficult. That's where the checks and balances have to be in place, and that's why it is important, because there are lesser disclosures there. You don't know their business model. They are not disclosing exactly their financials also in lines with what regulators may require also. So that's where the expertise is required by the private equity, and that's why checks and balances are required. And as long as that is in a private space, few investors, informed investors, investors with a higher risk appetite and high risk expectations, and a fraction of their portfolio going into that space is absolutely all right. So, it's a difficult space. Even if you try and understand this in a debt context also. AAA rated company, very clear, you get a AAA rated from a rating agency, this is the yield you will get, you invest in that. Now, unrated companies with a lower ratings, they are not able to get the subscribers, and they find it hard to raise money, and then again, you have to pay a differentiatedly higher yield, then only you get the subscribers. So, to that extent, I think, this is the full ecosystem. We'll have to look at in a holistic way and not look at into the, that this is right, that is wrong.
Okay. By the way, do we take questions from the audience, if we can? Yeah, we can. If the audience has questions, I'll definitely ask Neil to ask a question or two, because he spoke about it outside as well. But anybody else has questions? We have about maybe 10 minutes left. So yeah, there is a gentleman there. Is there a mic, or he can shout it out?
No, you get a mic. You will
Okay,
get a mic.
yeah, let's get the mic going. Lower Parel traffic is notorious after 6, so let's try and ensure that everybody gets home on.
Want mutual fund to invest in unlisted papers. Okay, so there was some sort of report saying that SEBI, mutual funds cannot now do investment in anchor or in unlisted papers. So how true is that, and what is actually the mutual fund take on this, please?
No, the mutual funds were allowed to do in pre-IPO. And pre-IPO stage is when you have already filed the RHP, and the pre-IPO you do it at the same price, which is the anchor price. And this is done one day before that. SEBI's concern was, since mutual fund regulations don't allow mutual funds to put money in an unlisted paper, for any reason, for any unforeseen reason, if you invest in pre-IPO paper, and on that particular day, for any geopolitical, any other reason, that IPO doesn't come, you will get into a situation where you have already invested and it is not listed, and you are holding a paper which is unlisted. So they didn't want to do that. They told them come at an anchor stage only. It's not that and mutual funds in any case are not allowed to put money in the pre-listed. This was in that context.
So there was an underwriting between RHP and the RHP, the 7 days. So that agreement you have to do with the issuer. So there is a clarity brought in. The industry was actually thinking about there is no clarity, because there is an undertaking a promoter has to give, that in case it doesn't go to a DRHP stage, you have to give back the money back. But that's the risk we are asked to run, but that clarity was a very good clarity for us. I think that circular had a lot of good clarity in terms of transparency, what we bring in.
Okay. Any other questions? I'm sure Neil has, so we'll give the mic to him for sure. But any other questions? Anybody in the audience? Okay, let's get the mic to Neil at least.
So, sorry, two questions from my side. One on the... To everyone, but one on the proposed TER reduction of 10 to 15 basis points, which penalizes large schemes. So now there'll be an incentive to launch yet more and more NFOs and thematic funds, which adds to complexity. So your views on that, and also your plans on, this is my favorite topic, on GIFT City and for NRIs and for domestic investors, how they can diversify outside India, what funds you'll be launching there.
First, on the TER reduction, of course, there's a point which, I think I was looking at a ticker which is coming on the TV today, that the difference of 90 basis point to 210 basis point is very huge. Actually, 125 basis point difference at the highest level, and the 90 basis point, 210 point at the lower level is a very, very huge. It needs to be brought down to 60-70 basis point so that there's a level playing field. So that's one. In any case, it's a consultation paper where people will give, MP will give their own views, and I'm sure the kind of ecosystem which is being created for ease of business and ease of, and everybody should have win-win situation, nobody should lose out. I think whatever will come will good for the industry, good for the investor, good for the manufacturers, and distributed everybody. Because 15 paisa is taken generally, right? If you look at 18% or 90 paisa or 18% on 210 is not 15. So it also has to be tiered. If our prices is tiered, then this is also has to be tiered. This is the one which is asked of the industry. I think this will go away. Your second question was on?
GIFT City.
GIFT City, yeah. GIFT City definitely is in the hand of government. We can't, as a manufacturer, we can't do anything. They fixed a 7 billion limit years back, more than a decade, 15 years back. Till the time that is open, from domestic market we can't do anything, because suppose as a fund house today we have 1.2 billion. I can't go beyond 1.2 billion. Only thing is whatever I sell, that much I can buy, but whatever I will sell, I'll get the money with capital gains, but what money will go out will be lesser. So that's the way we are. But yes, there's a demand for international diversification. Whatever route is available through GIFT City, through LRS, etc., it's not as easy as it looks like. When you have to transmit the money from the local account to GIFT City account, from GIFT City account to the another account, it's a whole lot of there are transactional issues. But yes, some money is going out, but it's not scalable. So this can happen only and only when it is done in the domestic mutual fund space, when the limit is increased, because in our view, anything invested through mutual fund route outside India is also a part of foreign exchange reserves, because the money in any case has to come back to India. You can't redeem outside. Money will be redeemed in India. So that's how we were discussing with that, and I'm sure at some point of time we'll get this relaxation, then we'll be able to offer very good products to the investors.
But developments out there would anyways help, right, in some sense, broaden the investor appetite for a lot of newer products as well, in some sense. I would presume that would be the case.
Yeah, not only newer products, we see India, as we have been talking about, India is a costly market. If I have to, my fund is putting money in Indian stocks as well as the domestic, foreign stocks, at least I can bring the PE of my fund itself down.
Okay.
Because the same quality of the company outside India is available at a much cheaper price than it is there in India. So that's an artificial ballooning of the price. I think we can...
Okay, I'm going to do a rapid... Sorry, you want to...
Just to answer the question on the GIFT City and Indians investing overseas, I think there are products available on the global investing side where customers can open an account and invest 250,000 per SSE in global assets. So that's something at HDFC Securities. We also offer global investing where people are investing in US equities and so on. Gift City, we have set up a subsidiary at Gift City also. We believe that diaspora is a large segment and they are looking at not to get exposed to the rupee depreciation. In last 10 years, rupee has depreciated more than 20%, and that's where they want to invest in India, but in dollar terms or and not lose on the rupee depreciation. So that's where there are opportunities for us to create products, and that will happen in due course. So there is a significant opportunity. We have already seen a lot of imports of commodities, gold in particularly, silver, happening through the Gift City. So there are opportunities there.
Okay. Final round of questions very quickly. We'll end this slightly early, but Dhiraj, to you first, because you're sitting on this side, on my side relative to the AMC side. You must be meeting a ton of promoters, right? And who want to either start a business or come out with a rather listed company at some point of time, or listed stocks per se. How much change do you reckon they talk about when it comes to the availability of capital from the Indian asset management industry for that company? Because they do QIPs, they do FPOs, they do IPOs, all of that. And the AMC industry in India is now standing firmly out there to give capital to the deserving promoters.
If you look at small and medium enterprises,
Exactly.
both of them are, BSE and NSE has got more than 300 companies listed there. There, I don't think so any foreign portfolio investors have any exposure and interest also. In fact, large asset management companies are also not taking any exposures there. So that's more of a private market. It is to get individual investors and also in a form of, family diversification. That's what they are using for the SME purposes, SME listing. That's where we've seen a lot of exuberance and a lot of attention is required. I'm not saying that's not a great route for them, but we need to have a lot more better governance there. But when it comes to the main bourses, I think we have a fairly robust, mechanism in place. You file your prospectus and you get approval from the SEBI, and then you go for a price discovery along with the investment bankers. That's fairly established process. Let's talk about the FPIs versus Indian. Earlier, the appetite of FPIs were much higher and Indian appetite was limited because the corpuses were limited. Now the corpuses are higher, the AUMs are higher, so that way the funds availability is also higher. So I see there is a great opportunity, and I think if we get more flows, whether it's through SIP or through the lump sum route, the appetite will even increase. Just one piece of 2 cents contribution on the FPI's flows in particularly, we have been talking about it, that they are taking out money and so on. I think in last 2 years, they have taken out money. Last year, 3 lakh crore, this year already 2.5 lakh crore plus and so on. But, they are not married, unlike the domestic liquidity, which is married to India and not using LRS route to invest in abroad. They are not married to India. They see opportunities across the globe, and that's where they are investing. If they are able to invest in US treasuries at 4.5%, why not? If they are able to invest in markets like China or Japan, where they have given higher returns than Indian market, why not? So there is nothing wrong in that. They are tactical. I don't think so. There is a beyond, we need to think beyond that. As and when they see valuation favorable to India, they'll come back to India. And in fact, if you look at it, FPIs have been participating in the primary market and exiting from the secondary market. Yeah.
And hopefully, if the growth comes back as it looks like, then maybe the FPI flow returns as well. Mr. Gopkumar, a hypothesis is what I want both of you to do as we wrap up this conversation. If indeed the SIP flows were to go up as more and more people come into the Indian markets fold, I leave it to your imagination to tell us what role can the Indian retail investor in the AMC industry play over the course of the next 10 years if indeed the flows go up, monthly flows go up to maybe 50,000 crores or thereabouts, right? Neelkant put it very beautifully in an interview to me that right now 11 crore Indians are putting in 2,500 or 3,000 rupees per month. At some point of time that number could double, and therefore the monthly flows could double. And then what it does to availability of capital to invest. So do the public market valuations go skyrocketing, or does more paper come into the private markets and thereby IPO route to absorb that liquidity?
So this is a classical case which the large economists have gone through. I think me and Nilkant had a lot of conversations, my colleague. So if you look at when the large flows comes in, then the active fund managers start underperforming. And you will have a new category called passives getting much more traction. That's my imagination, because there are different sets of, new set of IPOs will come in. You will get a new flavor, new sectors will build in. We already have almost 6,500 stocks in the market. And if you look at number of stocks get actively traded is almost 20-25%. This doesn't trade actually, because there is still a liquidity issue in terms of the bottom of the whole listing. So my view is that when the flow continues to go far, you will have stretched valuations for some point of time. Then the fund managers will find difficult to beat the index. Then there is a transition to the passives. So this conversation is quite often between actives and passives, but I just wanted to spark a controversy beyond imaginations that if the flow continues the way it is. But one more point you need to think about is that, which even Sanjay Prasad wrote about it, is that you are looking at a gross number. You need to look at net number.
Sake, yeah.
You need to look at net number.
Which
That's
Mr. Singh
what
spoke about as well. Yeah.
the net number is fine. It's around 9,300 crores. But you're looking at a gross number. But that gross number is also very important because it goes through the system. Because DP spoke about saying that he sought 300 crores and net number is 25. That's at 29,000 crores and 9,500 crores.
Sure.
I think a lot of people don't do research around that, but that's a fact of the number. And this number was publicly available, now it's not available.
Sure. Well, make it available. We want transparency, right? Why not? Mr. Singh, we'll end this conversation with your imagination again, but if the numbers were to go, okay, let's play it this way. You tell us, what do you think the monthly SIP number, let it be gross, doesn't matter. We'll get to the minutiae later on, but what could the gross numbers go like over the course of the next 5 years? And what does that do to either the secondary market valuations or availability of capital for primary markets?
No, I think a lot of work to be done by the manufacturers. We need to work on the supply side more than the demand side.
Okay.
Today we are having a small set of investment managers who are investing, but I think I need 3 or 4 times of that number who can go out in the market and find out the good businesses. We have to create a pipeline. Actually, this in any case, as you said, 30,000 to 40,000, 50,000 will happen. But the same will be the demand of the entrepreneurs, right? Both on the debt side and equity side. But I think in the capital market, we need to do little more in the fixed income market than the capital equity market also. Because if we want more and more money to come into the market, looking at the private investments, so I think that is something, and I am hopeful that government will definitely do something in the coming budget on the fixed income side. I'm moving away from our main topic, but this is what I clearly feel, that it has to be a time of hybrids where capital has to come both on the fixed income side as well as on the equity side, and we really have to work very hard. There's actually a bandwidth issue today in the investment players. People don't have that much of bandwidth because you have to do a lot of very deep research. It takes a lot of time to understand a company where you are investing. And our investment managers are spending 18-20 hours in a plant also to understand the business. But that bandwidth is limited. So today I'm thinking we need to work towards that. That's at the systemic level and at the manufacturer level. But from investor side, they will be putting in money and they will expect higher returns. And this is the responsibility of the industry and responsibility of the ecosystem to meet their aspirations.
I think last point is that even the distribution community is not large enough. For example, another 20 more AMCs come in. Your distributor community today, if you look at it, it's around 180,000 distributors, which are MFDs. Obviously, digital is taken off and fintechs are doing it. But if you look at active, it's somewhere around 75 to 80,000. So if you have a 70, 80 AMCs, I don't know what will happen.
Well, let's wait and watch. But yeah, as we wrap up, just one small point and something that I believe the previous session alluded to. I started something called as the Mutual Fund Show in 2017. तभी भी हम लोगों को every show पे explain कर रहे थे कि नहीं, people had confusion about the number of products, the nature of the products, and some of the opacity. I heard you say that ये disclosure होता था नहीं होता है. Why is it not happening? And in some sense, it's imperative upon AMFI to try and simplify it as much as possible. So an urge from a journalist who speaks to retail investors every week that let's try and please simplify a lot of things in a much better fashion, because you guys are doing great work. Just that little bit of the last mile of simplicity, if it can be done, will go a long way in getting more people into the fold. But thank you so much for all the insights.
Thank you so much everyone for that insightful discussion. I request everyone to please be on the dais. I now request our Director General, Sandeep Khosla, to present mementos to our panelists and moderator as a token of appreciation. A round of applause for all the panelists. Dhiraj Relli, MD and CEO, HDFC Securities Limited. B. Gopkumar, MD and CEO, Access Mutual Fund. DP Singh, DMD and Joint CEO, SBI Mutual Fund. And our moderator, Niraj Shah, Executive Editor, NDTV Profit. So please join us for a group picture. The round of applause should not stop. Thank you so much everyone. As we reach end of the session, I invite Shri Sandeep Khosla, Director General, Bombay Chamber, to please deliver the vote of thanks.
Thanks, Utkarsh. We had a fascinating discussion in this afternoon session, and I think nobody could sleep after that heavy lunch because it was fire-filled, as Lata's and Sandeep's session was, and very informative, the last one and the one before that. I would like to, thank our sponsors, Kotak AMC, HDFC AMC, Axis AMC, UTI AMC, SBI Mutual Fund, and Mirai Asset Mutual Fund, Aditya Birla Sun Life AMC, and HDFC Securities for making this possible. And hope you all had a lovely session. So if you're not a member of the Bombay Chamber, please become a member. Like this, we do almost 120 different events in a year, and we would love to have you a part of the Chamber. Thank you once again, and see you soon.